Did you have fun today? What did you do? Oh, things. You were alone most of the day.
Welcome. We are back. Crazy day in the market. I mean, the charts are insane right now. There's a lot to talk about. So we're going to get to all of that. Six new swings today if you include premium, 4 of them outside of premium. So Bitcoin, Ethereum, Fisker, CLOV, some very common names if you've been watching for a while. I feel like half the channel was kind of built around them. So if you've been here, it's been a minute. So yeah, kind of putting out a decent amount of swing trades for the first time in some time. AMC, which I put out a couple weeks back, is up like 13-14%. Tesla is like back to in profit, almost getting stopped out after almost getting stopped out. So it's a crazy market. I think we're up a lot since Friday in terms of the SPY. The VIX broke down last week. That's kind of been playing out nicely. There's some new formations there. We've got many things going on globally. It's a very crazy time in the market. On top of all of that, we also have earnings. We had Microsoft and Alphabet today. Tomorrow, I think there is Meta, and then Amazon, Apple on Thursday. Let's see. It's the wrong one. GDP on Thursday as well. But yeah, today we have Microsoft, Alphabet, Visa, Chipotle, Spotify. Tomorrow, Meta, Ford, Teladoc, Boeing in the morning, Hilton, and then Thursday, Shopify, McDonald's, MasterCard, Apple, Amazon, Intel, Pinterest, T-Mobile, huge day. Thursday is probably one of the biggest days of this earnings season, today and Thursday, I'd say. Looks like some gas companies on Friday, so we're kind of in like the peak of earnings season right now, that we're going to have some mid caps and small caps in the next couple of weeks. So all of this, of course, is very, very big. We will see what happens. Getting started with Bitcoin and Ethereum. I've been teasing this for weeks now, and we finally got the move I was looking for. I just wanted a little bit of strength for some more confirmation. Also, I was looking at something on the weekly, which I'm about to show all of you. But I put out a new swing trade alert for both Bitcoin and Ethereum. Let's get started with Bitcoin volatility. which basically tracks how much Bitcoin is moving. And when this is low, it means Bitcoin is not moving much. When it's very high, it means Bitcoin's moving a lot, whether it's up or down. It's pretty much at all-time lows right now. I mean, it's been a little bit lower once. But yeah, this doesn't stay around these levels. Every time it's been here, it quickly reversed up. So I'm thinking that the same thing's going to happen again. We will see what happens. But yeah, hopefully, you know, because this doesn't tell us if this goes up, it doesn't mean Bitcoin's going to go up for sure. I'm just hoping that that's the move that Bitcoin decides to make when the volatility comes in. And there are some technical reasons which might be arguing for that, which I'm going to talk about. What's up, everybody in the chat? Sonya's saying I dropped in to say what's up. I'm going to watch it later, but please give some good news to load up on put soon. We'll see. I'll get to the market in a little bit. I do have a lot of thoughts on how the market looks right now. It looks very, very different. This rally looks very different to me than all the other rallies we've seen this year. You can see the title of this year. I'm going to explain that a little bit more in depth. The guy saying AMC type 2 for a bullish bat on the weekly. I have some harmonic drawn for AMC. When we get to it, remind me. I don't know if it's a bat, but I do have some harmonic drawn on the weekly for AMC. Stack the margins. Happy that a regular stream schedule is back. I'm very happy about it as well. And yeah, so let's talk about why I'm bullish on Bitcoin and Ethereum right now. What's really changed? Of course, they both had really good days today. If you've been watching, I've had this massive bullish cipher from the COVID crash low to Bitcoin's all-time high drawn out from literally probably 3 or 4 months now. And I have also put out a swing like on the first time I hit this low, and that was a winning swing. It only hit the first target, but I did hit the first target. And then it's kind of pulled back now. So here's really what I'm looking at. You have your huge harmonic. It doesn't really get much better than this, in my opinion. Huge harmonic, and now you have two very well-defined long-term lows at this pattern completion zone. Of course, we've already talked about these variables on the stream. This is back testing your high from the end of 2017, and now you flip that into support and you've held it for months. Now the bears have had many opportunities to break it. Even a couple weeks ago, we were down at almost under 18K. The bears were not able to break that, and as you can see right now, if we really look into the details here, first of all, you're breaking this supply line on the 4-hour, this white supply line. Second of all, you're testing like a more short-term double bottom. This is kind of like the neckline. This yellow box over here is kind of the neckline of that shorter-term double bottom. So it's really testing a breakout right now on the daily and the 4-hour. However, on the weekly, it already looks like it's breaking out. It's been in this wedge pattern since all-time highs. And it kind of seems like if you connect this first high to this high in April of this year, you're somewhat breaking out. So in terms of how I set up this swing for Bitcoin, I put the stop loss under these recent lows. First target is a little bit beneath this high from September. Second target's right under the 200-day moving average, also lines up with this high from August. Third target lines up with a couple of lows right under that 28K level. You can see if you really look in there. I'm not going to spend too much time with that. But yeah, I alerted a new swing on Bitcoin today. Also Ethereum, pretty much another major bullish harmonic. Is not as perfect, but somewhat a bullish Gartley. You now have a higher low, well defined. I mean, this took 4 months to be created. On top of that, you just broke out of this shorter term channel. So I'm looking at those variables on Ethereum. Also, this is one thing that really stood out to me today, and this is kind of why I chose today, because if you watched like my last stream, I was already talking about me putting out these swings soon. I was waiting for some sort of sign, and look at the volume on this move today. Very nice volume on both Bitcoin and Ethereum. So I did like to see that. So that's really what I'm looking at on crypto. I try to look at some like altcoins, but it's really tough. Like I just want to start simple with Bitcoin and Ethereum. If you look at a lot of these altcoins, like these charts are just so hard to trust because all they've done really since like the top was just sell off. Like it's really hard to try and pick a bottom. Like it's just kind of a little bit scary to look at some of these. But again, fear is not always bad, but I feel like you want to know a lot more than just technicals to put any money in most of these names, to be honest. So I'm just going to kind of maybe wait to see if Bitcoin and Ethereum can get their own strength first, and I'll start looking at altcoins and those smaller cryptos. But yeah, let's move on to other markets, which are also doing very interesting things. We've had a lot of news across the world. Let's start with the US 10-year, which did print a shooting star candle right over here on the 21st. And you did get some fall through price action today, this bearish engulfing candle. This is a very textbook bearish setup in terms of candlestick patterns. However, you're still above this demand line on steroids. I mean, you haven't broken it since the beginning of August. So it's about to be 3 months that you've held above this. You're getting close to it again. the trend is still your friend. You're obviously still in a bull trend. The higher time frames don't look nearly as bad, but those shorter term time frames I think are kind of signaling for a pullback. And maybe if we get that, it helps out, you know, some stocks. We've got crude oil, not doing much. It broke out of this wedge, kind of back tested. Now it's just consolidating, so just waiting for the next move there. We have got metals. Gold is working on a double bottom around 1600. It's still in this down sloping channel. The MACD crossed over to green today. And then silver did bounce off the demand line of this broadening wedge with confirmed hidden bullish divergence on the daily. Interesting, but these are the next two that I think are really important. First off, the dollar currency index breaking down. This is really the first breakdown I think it's had in a long time. Breaking down from this ascending broadening wedge. You know, you do have support beneath you. That 109 level could act as support. You see as resistance here, even some support here. So maybe like you sell off to that level and then you start bouncing a bit, and then you get the hidden bullish divergence, and then maybe you just keep going. But for right now, it does look like a shorter term breakdown just took place, and that also could be another reason for Bitcoin doing well today. But that triangle I was talking about last week, you did kind of get that breakdown, perfect breakdown, back test, and then continuation of the sell-off, very textbook stuff there. So bearish for now, but it could flip at any point. And then the Hang Seng Index, let's go over to, I think it's the monthly, no, it's the weekly. Look at this very long-term trend line that you've now broken. You've held this for 2 decades, and China is now breaking its 24-year support. So yeah, this line has been here for longer than I've been alive, and you're now under it. So that's a huge technical change that's occurring. We will see. I mean, if we go from support levels, I think the next one's all the way down to like 12.6k pretty much, then 10.8k. It's pretty far down. I'm sure you're going to get some sort of like oversold bounce at some point, but I don't see really anything that's like super bullish apart from the fact that maybe you just got like a short-term dead cat bounce just because of how much you've sold off recently. So I'm really not turning my attention to these Chinese stocks anytime soon. This could be like a really long-term harmonic forming though. Could be maybe a butterfly already. Actually, it's pretty, I mean, if you drop a little bit more, you're kind of entering that bullish butterfly territory. So maybe you get like a reaction there. You really zoom in, you got it like a little high from 2004, around 14k, but I don't know, I'd probably focus more on just like the technical levels for right now. So those are your other markets, interesting for sure. I also want to look at the euro. This one should do it. So the euro is starting to bounce off the lows to put in this chart. Why does it say September? What's going on here? Oh, this is the weekly. Okay, let's go over to the daily. We were talking about this down sloping channel. You're actually breaking out of it on the euro to the dollar right now. Got a little bit of resistance around pretty much 1, which would make sense, I guess. But why is this not letting me? Okay, so yeah, you're entering a little bit of resistance, but you are breaking out of this pattern you've been in since the beginning of the year. So keep an eye on that, all right? And now let's move over to the market. Zeke put VIX in the chat, so we'll start off with that before we look at the indices. All right, so the VIX. First of all, let me delete this. I don't know where that's from. Actually, that's from the 1-hour chart. Let me put that back. All right, so on the daily, the VIX broke down from this triangle pattern. I did share this in the Discord last week, and you were testing a very key level right now. Let me go down to the 1 hour to show you this. So first of all, you already broke down from this massive broadening wedge, and now you are testing this zone. You got a little bounce at the zone at the end of the day, but if you break this, this is going to be your first lower low on the VIX in quite some time. This is something I was talking about last week. So you break under like 28, and then you're under this pattern, you're under the support, maybe all the way down to like 25.5. You don't really have much. I'll chart that level right now. So big breakdown being tested on the VIX. If this does break down, then it could help out the market quite a bit. So let's move over to the SPY and talk about what's going on here. All right, so first of all, we did get somewhat of a breakout today. I don't see a lot of people talking about this. And of course, we did pull back after hours with earnings. You had Microsoft and Alphabet. So the SPY did pull back about 1% after hours. The Qs pulled back 2%. The ARK ETF down 3%. And of course, like a lot of individual stocks also down after hours. So everything I'm about to say, we are going to be imagining that after hours is flat. because I'm just looking at where the day closed. But of course, earnings has affected a lot of this already. However, you never know. You could get a good reaction to Meta earnings tomorrow, a good reaction to Apple or Amazon Thursday, and then we can get the opposite effect. So when it comes to like earnings week, I try not to focus too much on the after hours until the market's open. So we'll see how this affects things when the market is open, but of course understand that things are a little bit different than what you're seeing on the charts as of right now. But basically, we broke out of this shorter term broadening wedge. I didn't even really chart this until today, and if I did, I probably would have noticed this partial decline. So you actually had a 70% chance of a breakout coming into today because you closed right at this supply line with that partial decline. And of course you did get the breakout. So you were able to do that. You also got back above 384, which kind of surprised me. I did share some puts, which I ended up marking as a break even right under 384, I believe, today in premium. It was a resistance level and there was like a little rising wedge, but you just kind of busted right through that level and just kept going. After hours, you are lower now. But you did break out of this. This is pretty much like a 3 white soldiers candle pattern here as well. So breakout, bullish candle pattern, momentum's growing. I don't think there's any issues with the RSI right now. I don't really see anything that kind of screams to me like we're going to stop this rally right now, apart from the fact that earnings are kind of happening. So technically speaking, again also if the VIX does make that breakdown, I think there's more room technically speaking. I don't see a lot of resistance. Maybe up towards that 390-ish level, we're going to have a little bit more. But the higher time frames look okay. When you get to the lower time frames, and again, you've kind of already seen this move after hours, but when you get to lower time frames, then it just kind of signals at least like a short-term pullback. Like you have that potential classic bearish divergence on the 4 hour. If we open red tomorrow, that's probably going to be closer to confirmed. And then if we go over to the 1 hour chart, you do have this couple different things. You have that, again, that classic bearish divergence on the MACD. You're overbought on the RSI. You're kind of in this upsloping channel. You're at some resistance. You can't be surprised like these types of variables are appearing after we just went up 6% very quickly. So I think it's very standard stuff. Nothing I'm too worried about. Even if we do pull back, I don't think it's the end of the world. I think a lot of the hard work in the past couple of days have already been done. So a pullback could be very normal here. I'm not too concerned about it for right now. And other charts look very, very different than this, which is also another interesting thing, which we're going to talk about in a second. But the longer term channels that I was talking about last week didn't end up playing out more than the bear flags. It's kind of like the bear flags played out like really quickly, they didn't really do much, and then you just kind of back tested your longer term channels and then just went back up. So it's like a little bit of both happened, but definitely like the more bullish standpoint kind of won for right now. So where does that leave me? I'm still very skeptical, like longer term. Again, this is not the type of rally I think that looks like a long-term bottom for the market, but more shorter term, I am flipping bullish. And again, take that with a grain of salt because again, after hours, and also we are overbought like right now. But basically, even a short-term pullback, I think is still not bad. So I think really the next few weeks, maybe we might even just have a nice end to the year, to be honest. There's going to be pullbacks along the way, but I kind of feel like maybe that the year's low is in. There's 2 months left, and currently we are about 10% above the lows of the year. Even if we pull back some, I would be surprised if we made a new low this year. I think that a lot of bottoms have been made at this level. You have this first bottom from June, second bottom from October. Well, 2 different bottoms in October at a very technical level. This looked like capitulation to me with the volume, with the fact that you gapped down and then had this one of the best days during the market ever. I think we could see some more continuation of this overall uptrend in towards the end of the year. Of course, with pullbacks along the way. I'm not saying we're going to do this, but something like this I think is possible. So I'm kind of starting to flip back towards that standpoint, but I'm not ready to say like the bear market's completely over. We're not going to go lower at all. I think for right now things are okay because we've already made multiple lows at this level. So that's really where I'm kind of looking at things. That's why I'm putting out more swings right now. But of course, don't just go all in at one time. Cost averaging is important, and understanding that pullbacks are going to happen is also important. Moving on to the Qs, which are down quite a bit after hours because of the Microsoft and Google earnings. We'll start off with Microsoft, of course. Let's go down to the 4 hour. You did pull back. Well, that was actually, wow. Looks like it kept falling down. So it wasn't a horrible initial reaction, but you kept selling off the after hours. I haven't even looked at that chart. Down 7% pretty much. It kind of was like this bear flag developing into the earnings. Not that that really meant much. I thought they beat as well. I don't know. But I'm sure something went wrong or whatever caused that to happen. So you did have Microsoft sell off on their earnings report today. And then also Google did the same, kind of missed on a lot of different metrics. You go over to the 4 hours, same thing over here. You got about a 7% decline after hours. So like longer term for Google and Microsoft, I think you just want to watch these recent lows they put in. Google is around 95 and then Microsoft is around 220, but 227 is more of a technical level, to be honest. So just keep an eye on those. I haven't looked too much into the numbers and I'm probably not going to be honest. So that's how we kicked off like the major tech earnings. Tomorrow we are going to have Meta. I think this chart looks actually really interesting. It's testing a breakout of a wedge. It just double bottomed. However, that means nothing. We'll see what happens with the earnings and then we'll look at the chart after the earnings. But you did get a bounce over the past few weeks off your lows from 2019, almost 2018, like literally the beginning of 2019. So heading into its earnings tomorrow, Meta is at the lowest it's been in what, 3 years? Something like that. I don't know if it's 3 or 4. I'm really confusing myself over like the fact that it's the beginning, but yeah, it's not been this low in a long time. It's lower than it was, or it was lower than it was during the COVID crash. So we will see what happens tomorrow with the earnings. Of course, all of that's taken a big toll on the Qs, which also broke out today before the close. You broke out of this down sloping channel. You had classic bullish divergence. On the 4 hour, you can see you had that nice uptrend. I don't know where these are from. But we zoom in over here, you did enter some resistance around 285 before the market closed. Now if we go to extended hours, you're all the way back down here at 278. Now that's interesting because this 279 level is a gap fill. So depending on where we open tomorrow, 279 can be a very key level intraday. You even have a couple of lows over here at this price point. Like if you really zoom in here, there's a lot at this 279 level. So I'm going to be keeping a very close eye on the Qs tomorrow, intraday, because of the fact that we just had those earnings today, but also we have Meta tomorrow. So tech is obviously probably the primary focus of the week. And that's the Qs. So just to recap, like I think things are switching back to bullish, but we are having this short-term pullback with earnings and just being a little bit of overbought because of how quick we got in the last few days. But I'm not looking at this pullback to take us right back down to the low of the year, to be honest. There is one thing that's also something I want to talk about. If we go over to the weekly chart on the Qs, classic bullish divergence, it just looks like a very nice channel. You're pretty much making this lower low double bottom and the SPY looks the same. Lower low double bottom, classic bullish divergence in this broadening wedge. These are not bad formations. I think this is the best that the weekly charts have looked since the top. And we're at the point of divergence, which is probably the best, where it's not like fully playing out yet, but it's very, very close. And if we can just get a little bit more of confirmation, that's big. That's very, very big. So I'm keeping a close eye on those larger time frames. Moving on to small caps, we did talk about this dragon pattern on the Russell 2000. Very nice move. I don't think it was affected as much after hours. It was pretty much flat after hours. So this is where things get interesting. Like, yes, we're in earnings season. Yes, the Qs are down like 2% after hours. Small caps are flat after hours. And you just broke out of this dragon pattern. You held this zone of support, which used to be resistance for months. And now you're breaking out. There's really nothing until 188 either. That's a very big level. When we get there, I'm probably going to be a little bit scared of it. But you could see these lows over here, and then also the 200-day moving average and a gap fill. This is like 188 is like everything. It was also kind of like the bottom of the range this used to be in. Actually, that's not true. That was all the way up here, but maybe this range. So Russell breaking out, highest candle close on the Russell in about a month. So nice move there. If we go over to the 1 hour, we might even end up making, even the lower time frames, we might end up making some sort of like a triangle pattern here to look at tomorrow. So I'll be watching that intraday as well. And then this is the big one, the ARK ETF. All right. wedge breakout today. Classic bullish divergence confirmed. Yes, it could turn into hidden bearish, but you're not losing momentum for right now. It is down after hours, so maybe if you open like that, it will be. But these are, again, major lows. Like overall, it's a very large double bottom from these lows and then this one. But even more shorter term, it's like a mini double bottom over here. So it's like 4 well-defined lows right off this level. And why is this level important? If you watched last stream, this is the final level of the ARK ETF. You break this, there's really no support left. And you're holding it successfully and breaking out of a wedge with divergence at the same time. So if there's anywhere where you want to see these variables, it's right here. So that's why I'm also putting out swings. I'm looking at this chart. I'm not just looking at the SPY. And a lot of growth stocks also look very interesting despite what's happening with the SPY after hours and all that, and the Qs really mainly. So let's talk about first the swings I've already put out. First of all, we have Tesla, which is now back in profit. This did get stop hunted but never closed at or under the stop area, and it's now back in profit. Yeah, it had earnings, it sold off, but now it's back up. We got a bullish pin bar candle over here. We've been kind of going up since then. On the 1 hour chart, it's not perfect, but it's kind of like a right angled descending broadening wedge, which is a bullish pattern. Something like that. So you've got a bullish pattern with multiple other bullish patterns. This is the major area you want to see Tesla hold, and for right now it is. MACD is now green for the first time in about a month. Volume's holding up pretty nicely at this support. These are the signs that I want to see. So far so good for the Tesla swing, which is currently up like 1%. But we have AMC, which is now currently up 13% since the alert. It's the highest candle close in, I think, a few weeks. And also, if we get onto lower time frames, you broke out of this wedge, but you even had like a more shorter term pattern here that you broke out today and saw a nice move off of. Bullish engulfing candle. There's really not much resistance until the first target, so hopefully it just keeps going here. Nice start to this swing. Even GameStop today, which is not a swing I've alerted, made a pretty big move. It has this range and it is on breakout watch. Pretty much above like 28 would be a breakout of this range GameStop has been in since September 21st, about a month ago. So GameStop's really been consolidating. You saw a big move today. Highest volume since like the beginning of September in almost 2 months. And I have my alert set up right over here at 28. It tried for many times today. I was very close to alerting calls on GameStop, but it just kind of started losing strength. So keeping an eye on that for GameStop. Now let's talk about the 2 new swings. First off, we have CLOV up 10% today. And why did I alert a new swing on CLOV? This is the first time I've alerted a swing on CLOV. Let's see. Since September 21, so in over a month. The last time I alerted a swing on CLOV, let's see where that was, the 21st. So I alerted a swing on CLOV around over here, hoping that it would hold these lows, and it broke it, and then probably stopped out like over here somewhere. So new swing on CLOV now. Between that period, it just kept selling off, but you finally have broken out of this down sloping channel. We got a bullish hammer candle yesterday with fall through price action today. And if we go over to the weekly chart, just like the Qs and the SPY and a lot of other stocks right now, we've got weekly classic bullish divergence developing. So those are the variables. I put the stop loss pretty much right under all-time lows. First target is like a more shorter term level. I'm not going to really zoom into it. Second target is this previous support area. And then third target, I think is a gap fill or something over here. And then fourth target would be a 100% gain. That's like another like short-term resistance like over here. So very good day for CLOV. This is probably the nicest day it's seen in a while. And yeah, you broke out today. Breakout day for CLOV. I'm not trying to get too excited. There's been false hopes before, but this is a good start if anything. So I'm keeping an eye on that. Also, Fisker up 5% today. It was up like 12 or something percent earlier. If you chart your wedge like this, connecting this high to this high, and the reason I did that is because it also lines up pretty much with this area rejected, over here. You kind of broke out today. Even if you take like this, at the high of the day, you were kind of breaking out. You just didn't really confirm it. So Fisker is also testing a breakout of this wedge it's been in for a year, again with weekly classic bullish divergence. Very close to a tweezer bottom on the weekly as well. It's just the fact that you gapped up, it seems like, last week. So we'll see what happens. Fisker's short interest is like 30-something%. I haven't looked at CLOV's. CLOV's is about 10%, nothing crazy. So 2 new swings. I'm being very, you could probably tell there's been times where I put out Fisker and close swings and I was like jumping up and down. I'm being very calm about these. I'm not like overly anything. I'm just, these are levels, these are variables I'm watching. I put the stop losses at new all-time lows. Hopefully that doesn't happen. You know, both of these stocks are relatively lower than they've ever been for the most part. So, you know, if there's any area where hopefully they can keep going, it's here, but it hasn't happened in a long time. So it's a little bit hard to get too excited until we see some more action, but it was a good start, like I said. So those are the new swings. I put out another 2 in premium today. If you are interested in that, there is a sale till the end of the month, only about a week left. So yeah, it's 10% off your first month if you want to do monthly. And then if you want to do annual, it's 20% off forever. So it's not just your first year, it's forever. Annual is already 30% cheaper. So if you were to do monthly for 1 whole year, that's almost $600. And if without this sale, if you were to do premium for a whole year, it's $379. But with this sale, if you do premium for a whole year, in annual, it's $303. So that is a 48% discount if you sign up for annual by November. If you sign up for annual, you're pretty much getting half off forever. So that's up to you. If you want to see some more stuff, you can click on all these links. The sign up page is the pinned chat and the first link in the description. I'm not going to speak too much about it. Like, if you want to look into it, you can. If you don't, all good. But I want to make sure you are aware of pretty much the almost half off sale on annual right now compared to monthly. We'll leave it at that. So yeah, those are the new swings, and there's 2 other ones I put out in premium today and another one I put out recently as well. And then there's Apple. This is a premium swing that hit its first target today. I alerted Apple at 143. It almost got stopped out again, but you can see it was able, it hit the stop, but it never officially got stopped out because it rallied the same day before the close. So from almost being stopped out to almost at the second target now, very nice move for Apple. I did talk about this pattern on the stream, this bullish Garley, the hidden bullish divergence, the major support. I drew all this on the stream, and I did alert it in premium. I had these boxes hidden on the stream, but now you can see them because it already hit the first target. So not like a crazy swing. I mean, it's Apple. You're not looking for like a 20% move in a month, but it is a nice move nonetheless. Very good strength. Of course, it did pull back, I believe, a little bit after hours with the other tech names, but very luckily that it hit the target not only before the pullback after hours, but also before its own earnings, because you can never know how that goes. So good move today. I mean, just in general over the past week for Apple, very nice stuff. And yeah, this is probably the hottest the market's been in a long time in like a short-term period, probably at least since like this move over here in August. So we're seeing nice moves right now, but again, earnings and a little bit overbought on lower time frames. So short term, it's really a coin flip, but I really do think we are seeing some strength that could hold for at least a few more weeks, and that's why I'm putting out swings. Currently, this is the most amount of swings we have on the sheet in over 2 months, and there's been a good reason for that. Let me see where it was here. So there's like, I think 12 or something swings on the sheet right now. It's pretty much like 50-50 between premium and non-premium. So yeah, I know I've not really alerted much over the past couple of months. The market's been I don't want to say any bad words, but the market's been not good. But now we are seeing some strength. Of course, you know, some of these might pull back before going up. Some of these might stop out. There's no certainty they're all going to play out. I'm hoping, of course, most of them do. But the risk management is also very important. If you want to learn more about that, my free course is in the description. So there we go. That's really what we're seeing. Glenny Trades in the chat. How are you doing? Santa Claus rally. It could be starting. So this is probably the most bullish I've been on things in a couple of months. That's why I'm alerting more than I have in a very long time. But it's a little bit too hot, I feel like right now. So I'm not trying to, like, you know, completely step on the pedal like out of nowhere. Just slowly take things as they go. but my sentiment is definitely changing with this rally compared to like all the other rallies we've seen this year. So that's my thoughts on the market and the swings and everything right now. We do have some more earnings coming up this week. We have Meta tomorrow, which I already talked a little bit about. Again, doesn't mean much to look at the charts right before the earnings. So we'll look at them after. We even have Amazon, which was on the premium watch list not too long ago. I actually did share this again today. About like 2 weeks ago, I shared Amazon on the watch list. I was watching this bat. You could see perfectly reversed right over here. This is where I shared it at this D point of the harmonic. And as you could see, that was literally the bottom. Another good example of harmonics playing out. So right off that D point of the harmonic, Amazon reversed. It actually broke out of this down sloping channel today. It's testing this $120 resistance level. It's got the next resistance around the 200-day moving average at 132. But again, earnings are going to probably come before it gets anywhere near that level, unless earnings take it to that level. So you've got that coming up on Thursday. And then again, we literally just looked at Apple as I was talking about the swing trade. So we've got some more earnings this week. Take a look at Twitter, which is breaking out of this $52 level after breaking out of this bullish pennant over here. This is a very nice level to keep an eye on. I was talking about this recently. It's above the level. The next one now is around 54.5. So Twitter just broke out. Yeah, there's a lot of different things. There's also AMD, which broke out of this channel today after consolidating. Like, you see this little zone between like 56 and 59. If you go way back, you actually did the same thing. A lot of resistance here in May of 2020. You were able to hold it. Actually, I didn't even think it was going to hold it, to be honest, but it did. And now it broke out. So we'll see what happens. Earnings are in about a week for AMD. So you've got that. And then also another one I've been keeping an eye on is Coinbase. This was in the most recent weekly watch list that I sent literally 2 days ago in premium. As you can see over here. I sent this over the weekend, and Coinbase was up 13% today, and it broke out of this triangle pattern it's been in. Also highest close since around like the middle of September. So nice breakout move for Coinbase today. Kind of a bullish engulfing, even though it gapped up a little bit. So there is some heat in the market right now. It might be a little bit too hot. If we're going to use the analogy here, let's just say that's the oven was turned on. It's a little bit too hot right now. So let's just let it cool down a bit, but then we'll warm it back up, all right? Hopefully it warms back up, but it might have to cool down a little bit first. You don't want a fire to start, okay? We can't keep doing this every single day for the rest of the year. There's going to be pullbacks. So that's my analysis on everything right now. I know my streams have been very random over the past couple months, but if you're still watching, if you're sticking with me, you know what to do. There's a like button. You could try to click it. Cool things might happen if you click it. It's up to you. All right. I just noticed we're just a little bit low. I'm not complaining, but I also am. All right. With that being said, let's do taker requests. All right. So if you want me to look at a chart for you on the stream right now for free, and you want my opinion on it for whatever reason, drop it in the chat and I'll take a look. There's a lot of things going on right now. So what charts are all of you looking at? Also, feel free to tell me what you're seeing, and I'll see if I see the same thing. All right, so Zeke said MAR. I think we just looked at it. Or no, we might have not. MAR was up quite a bit today. Literally broke out yesterday from this wedge pattern. It does have the 200-day moving average around 16. Even really 15 is a resistance because of this high and low over here. Even this low from May 2nd. So it's approaching some resistance right now, but it did just break out. And if we really zoom out here, this is the first higher low you've made in a very long time. Like, I don't even know if you really want to count this. This is almost like the same low. I feel like over here is kind of last time it was like in a real uptrend. So the trend is shifting from a literal standpoint. You're making a higher low, which is a good thing. So that was MAR. We got Disney, some others. We did look at Tesla already. It'll be in the timestamps. Okay, Disney, big double bottom taking place off of $91. I don't know if it's a textbook harmonic, but I just really like that. Like, if you look at it as one, I mean, it's almost one. It's like a mix of a bat and a Gartley. It's like the type 1 move was over here, and then the type 2 move is kind of happening right now. But even more short term, it was close to a bat. Probably just got a little bit too deep there. But You hit a support, you made a bullish engulfing candle right off the support over here. You've been seeing continuation. I'm sure at some point it's going to break this demand line, but until it does that, it's okay. And there is this gap fill all the way up around 111. And then U is actually, let's go back to Disney really quickly. U is very similar to how Disney was literally over here. We take a look at this, like we just look at like that, right? So this is Disney, and you can see what happened after. U looks very similar to that at the bottom. I don't know what's happened there. All right. You can see you're retesting these lows. You've got classic bullish divergence. You had a bullish pin bar candle yesterday. You're testing a breakout of this wedge. Let's go over to the weekly time frame. You're near all-time lows. This is a very important area to hold. It's probably your last important area, very similar to the ARK ETF, obviously. So it's testing a breakout as we speak. Then we've got LVS. This is like a megaphone pattern over here. All that really matters is which way it breaks out, which at this point is going to need a pretty large move to break up. Of course, you might get some other patterns before then. So this one's tough. Like overall, I'm just neutral on this. Like it's just one huge range, and you're just kind of going above and below the 200-day moving average nonstop. You're really struggling to get away from it. Very neutral on this chart. I really have no clue. BBIG. Who remembers? I don't know why that moved, but who remembers this support? That was such a nice support, and then it broke it, and then it got destroyed, and then it flipped it into a resistance. But that's well above us right now, so we'll stop talking about it. Right now, it's in major consolidation mode. Looks like you might get some sort of a break to either direction pretty soon, getting towards the apex point of this triangle. So just see which way it breaks. You've got some support at 92 cents, kind of really just the upper 80 cent to 90 cent area, like this whole entire level here is your support. So just see which way it breaks. If it breaks down, hopefully it doesn't, but if it does, then you've got a gap fill all the way down to like 73 cents. And then MULN, it looks like it broke out of this wedge, and it's had a nice few days since then. If it does pull back, there's a gap fill around 38.5 cents. If it keeps going, there's some resistance around. Oh, I swear I did not even look at the high of the day. Today I was looking at these lows, but no coincidence that these lows flipped into your high of the day for at least today. But that's like your first resistance level, and then it's more solidified by literally the high of the day today. And then after that, you got like 70, really like the upper $70 cent area, like this whole entire zone here. So those are your levels on MULN. BNGO, hovering over the 200-day 1-hour bear flag. All right, so BNGO, let's see. It is making this move above the 200 moving average. If it can just take out this resistance at like 235, that would be really big. And here are some next levels. I'm just a little bit worried about this like turning into a bear flag though. We'll see. But very good day today. We got Workday, which is testing a breakout after double bottoming at the PCC of a bullish shark, classic bullish divergence. The variables are here. All right, these are the variables I like to see. They're here. As long as it can hold this like 135 area. Look, it used to be resistance over here in 2018. Now it's your support. As long as it holds that, very interesting. It's also pretty close to like a bullish bat short term. Look at it like this. Very interesting chart. We'll leave it at that. Then we have Walgreens. I'd probably extend this like that. It's getting back above this support zone from the end of 2020. This is like kind of like an alternate bullish bat. Not perfect. But as long as you can hold this like $33 area, not bad. It's kind of like springing back above this support. I don't know if I call this Wyckoff accumulation though, but it's trying. And then SWN, just been in a range. Same thing, just neutral on this. It's very similar to that. What chart were we just looking at? It's like a range 2 and it was around the 200-day moving average. I think it was LVS. yeah, it's really hard to get an opinion on charts like these. Like, they're just consolidating at a very important area, but until they break away from those areas, it's not much of any bias that I can have from like a technical standpoint. Netflix just got above the 200-day moving average, just pretty much in this gap zone. So your gap to fill to the upside is like 332-ish. Your gap and previous resistance is around like 250-ish. It's right in between. Very big levels. So it's literally in the middle of two huge levels, but it is above the 200-day moving average, and it did have this nice large candle to break above it. I'm a little bit worried about that volume dropping though. Maybe it backtests the 200-day moving average at some point. SHIB. This is not bad. You're kind of breaking out right now. Classic bullish divergence. You know, there's a lot of different supports you can pick out here, but just in general, if you can hold whatever this number is, that would be important. And then it's like the next one down over there. And then NEO. Again, you're looking at the Hang Seng Index earlier, and it's a little bit tough, but you did get a bullish hammer candle yesterday with a lot of volume. And this could turn into a harmonic. I mean, it would be a crab all the way down to like $4. So it's nowhere near one right now, but you do have that hammer from yesterday, and then you could probably chart like a new channel here, which you're not too far away from breaking out of, but you haven't broken out of it yet. So that is NEO. All right, so that's gonna do it for the take requests tonight. Before I head out, we're going to be doing a tier list. Shout out to the Lump for making another one. If you didn't watch my last stream, I did like a tier list on the moderators in the Discord. I think it was entertaining. And if you're in the Discord, I mean, if you're not in the Discord, it's probably really random to you. You're probably like so confused, but if you are, it should be fun for you to watch. So it's in the timestamps of my last stream. But we are going to do another tier list. We're gonna start doing these probably quite a bit. So this one is going to be on technical patterns. Basically, I'm going to rate which patterns I like trading a lot, which patterns I don't like trading. This is not going to be based off of statistics. This is based off of my own personality trading, and just my experience, which you know, you can always have more experience, but so just based on how I like these patterns, I'm just going to rate them like that. Don't take it too seriously. I'm confused by that inverse Medi category. That means it's like the best pattern ever. I don't know. I'm just gonna not put anything there, but nice touch, I guess. All right, so hopefully you can see everything. Let's go full screen. So I guess this is like some good, actually, I don't want to call this education. All right, if you want to learn actually about patterns, watch my course. That's gonna be a lot better education. This is just me picking and choosing which patterns I personally like. All right, shout out to the Lump for making this. Let's get started. We're just gonna go in order. So we've got the inverse head and shoulders. I'm not a huge fan of them because it's a little bit hard to manage your risk around it, especially like, it depends on where you're entering. I don't really know if you can see like this much, but like if you enter on the right shoulder, you can place your stop under the right shoulder, maybe under the head, but it also depends on how large the pattern is. And then also with these patterns like breaking out, it can be a little bit tough sometimes because it's usually like a major resistance. So I'm not the biggest fan of those ones. I'll go with C. It's not horrible, but bullish falling wedge. I love these. It's very simple. I love these in bull markets. I hate them in bear markets because the crazy thing is like break out of your wedge and then you just keep going lower. So it's like a little bit tough. And then also like, do you want to play the domain line or the breakout? So I'm putting this right in the middle. These are probably like my most profitable patterns when the market was like in a bull market, but since the bear market, I've seen a lot of wedges just like keep wedging down, if that makes sense. Like it breaks out, but then it goes back down. So you just like drag your line over and it just becomes like a new wedge, if you get what I'm saying. So I think it's very market dependent. This looks like a descending broadening wedge. I like these quite a bit because you can look for the partial declines. In general, that's why I like broadening wedges. They're a little bit more rare to find, at least in this type of market. But when you do find them and you also have that partial decline or partial rise move, whether it's bullish or bearish, I think that it just makes things a lot easier. So I'm actually gonna go with A. Triple bottom, not a big fan. I feel like if you can't double bottom, then the triple bottom scares me a little bit because like you should have gotten the larger move off the second bottom. So the fact that the bear is able to pull down a third time, then it starts getting towards that bear flag territory. I literally trust, I know it sounds crazy, but I trust triple bottoms less than double bottoms. And you technically have more bottoms with a triple bottom, but I feel it's like you should drop down, bottom, go. Like, I don't know why you're waiting around. So I'm actually gonna have to go with D for that. I'm gonna actually do double bottom at the same time. I know it's not in order, but I'm gonna put double bottom at like, I'm gonna put at A. And the reason I wouldn't put at S is because they're typically small patterns. You know, you want larger patterns, but they're very easy to manage risk around. You put the stop loss right under those lows, and you know, targets you just look for resistances. Very simple, easy textbook patterns. I feel like this is one of the first patterns that most traders learn, and I think it's a very staple pattern for a reason. Symmetrical triangle F. You know, it's a pattern, but really it's like all that matters is which way it breaks. So it's not really giving you much of like a trade to take until it already does something. So it's like a lot of the times like the move happens so quick, and like you wait so long for it to get to the end of the pattern. Especially I hate these intraday. You don't get them much intraday because it takes a long time to develop. But like these are the types of days in the market that I just tried not to trade, because like you think it's at the end of the pattern, but then it literally goes like all the way to the end of the pattern. They just get confusing and they can become overcomplicated, even though they're just literally going sideways. No, I don't like them at all. Ascending triangle. This was one of the patterns I used to trade so much right after the COVID crash, because you saw them in a lot of stocks on the way up. So very similar to the wedge. Like they work great in bull markets. I don't see them work too well in bearish markets. They look more like larger bear flags in bearish markets. Bullish pennants, or just pennants in general. They're small patterns, continuation patterns. Honestly, I don't trade them a lot because I'm not much of a continuation trader. I trade reversal, so I'm gonna go with D. Flag patterns are very similar, but I do prefer them more than pennants, so I'm gonna go with C. I don't know if I said C or D for that. Cup and handle, wherever I put the inverse head and shoulders, C. Very similar to the inverse head and shoulders. Like the idea is good, but they're hard to trade sometimes, so it makes it a little bit tougher. This is just a range. Where did I put the symmetrical? Right here. You know, these are neutral patterns, right? And I don't know if this is more of like a bullish one because you're in an uptrend, but still, all that matters is which way you break. And then it could even be argued as like Wyckoff distribution if you get certain variables within that range. So these are how I would rate the textbook patterns. All right, so we got broadening wedges and double bottoms. Of course, you can flip all of these. It could be double tops, double bottoms, but we just did the bullish ones here, the lump did. So broadening wedges, bullish, or broadening wedges and double bottoms, favorite. Falling wedges, ascending triangle. It's good in bull markets, not the best in bear markets. From my personal experience, again, it's not based on actual statistics. Inverted head and shoulders, cup and handles, flags, mid, D. Yeah, I have triple bottoms. I just don't trust them as much because the bears brought it back down. And then pennants are just too small sometimes. And then triangles and ranges, you know, they're hard to trade sometimes. They don't really give you much info until they're already doing something. So these are the standard patterns from my experience. Then we've got the harmonics. I'm not going to do a lot of explanations for these. I'm just going to kind of, because they're kind of all just different harmonics. I'm just going to do them based on like trades I can remember and stuff. I feel like bats are a lot easier to manage risk because like you're so close to that X point, so you just place a stop under that. So I'm a fan of bats. I'll go with A. Butterfly. Where do you all think I'm going to put the butterfly pattern? Where do you think I want to see some chats? Where do you think I'm going to put the butterfly pattern? For any day ones watching the stream, where am I going to put the butterfly pattern? Okay. Where am I going to put it? I'm not going to say the next thing, but yeah, where do you think, what tier do you think I'm going to put the butterfly pattern in? Drop it in the chat. We've got an A, an F, an S. I want to get one more. ARS. Okay. Good job, I am. The butterfly pattern is literally on my wall, like right there. I can't like move my camera and stuff to show you, but the first thing I see in the morning, I'm not even joking. When I wake up in the morning and I open my eyes, the first thing I see every single morning is a bullish butterfly. Every morning. Before I look at my phone, before I do anything, my eyes open and I'm looking at a bullish butterfly. So it has to go in S. This pattern is one of the main reasons all of this started with Fisker and just the streams and everything. So just because of the nostalgia, honestly, if I'm being completely honest, this is all very biased because I can't even remember a lot of butterflies that have gone super well apart from that one. But just because of that one singular one I'm putting at the top. The crab, very similar, but actually for CLOV, there was a nice crab in the beginning of 2021 when CLOV really made its first like huge dive. I think like way after the Hindenburg report and everything. So there was a nice crab pattern there. I remember that one. Crabs in general, they're typically happen like they're very deep. So it's like you can get a crazy move when they reverse. There was like a whole entire period where there was like crabs like all over the place. It was like one of the first major sell-offs during the bull market. I think there was like a UWMC crab around the same time. So crabs also, just because of how large of a move you need for them to develop, I feel like they're more rare and they could give you larger moves, or I've seen some larger moves. So I'm gonna go with A as well for that. I'm gonna try and keep all the harmonics on the left side. Gartley, I'll go with B. They're good. I've seen some nice Gartleys. Really nothing much to explain there. Sharks and ciphers, I'm gonna go with like C or D. You see them quite a bit intraday, but they're very common and they can get a little bit confusing because, you know, when you're at the 786, it could be a cipher, but then you can go deeper and they could be a shark, and then the shark can go down to the 113. So the difference, like really from like the 786 range all the way down to the 113 range, you could have anything from a cipher to a shark. So that's like a 30% something difference in like Fibonacci. It can get confusing and it could take a lot more patience, but again, these are not based on statistics. It's just from how I like to trade them. 5-0s, I never trade 5-0s. I like stopping at like that final. I like stopping at the D point of harmonics. I don't like kind of taking a harmonic and keep going. I just haven't traded them much. I don't look for them, so they don't really like show up because I'm not really looking for them. And then a deep crab, I'll just put it next to the crab. I don't really see much of a difference. I mean, there's a difference, but yeah, nothing to complain about. So there you go. That's my patterns tier list, and again, that's just from trades I can remember and stuff like that. So there you go. Tier list of the night. Maybe we could do like a favorite stocks tier list next time, tomorrow. I don't want to always do stocks, so I want to just do like random tier lists as well. So we'll do that too. And yeah, thank you for watching the stream. I hope you all have a good night. Good luck trading tomorrow. Hit the like button, hit the subscribe button, join the Discord. Link is in the description. You have until the end of the month if you want to take advantage of the premium sale. I've only done like 2 sales this year. I did a sale like pretty much every month last year. This year, I've only done like 2 sales, or maybe 3, like actual sales that were more than just like one day. So if you're interested, especially the annual one, I changed it. These were both just 10% off your first purchase. That was it. But I changed it today where now you can get 20% off forever, if you want to go with annual. So instead of paying $583 a year in monthly, you'll be paying $303 forever. So if you want to get grandfathered in, you literally have until a week from now pretty much to do so. So first link in the description, pin chat. I know it sounds crazy. This is like one of the worst markets we've seen in a long time, and I'm like, yeah, premium, like again, good times come after bad times. What's that thing? That quote? I just like a very simple version of it, but I'll leave you all with this, and I'm not even just trying to relate this to the sale, but it's just a good little meme. I think I even saw this on Mitch Ray's stream the first time. All right, so I'll leave you all with this, and don't focus on the pictures, because all these pictures are like religion and war. I don't want to really talk about that on the stream. I just want like the words, but I'll just say it then. I don't want to. Literally, all these are like something religious or like a war or something. But good times create strong men or women. Strong men create good times. Good times create weak men. Weak men create hard times. All right. So when things are low, that's when you want to really, really, really be remembering that there's only one way to go from that point. And maybe that's not always the case with stocks. They can go lower, but it's just a good metaphor to remember or something like that.